Ever feel like companies talk about sustainability kind of vaguely?
Yeah, like it's disconnected from the actual, nuts and bolts of their business.
Right. Like planting trees, great, but how is that boosting their bottom line, showing up in the financials?
Exactly.
Well, get ready because today we're tackling that disconnect head on.
We're doing a deep dive on IFRS S1.
IFRS S1, it's the new standard shaking up how companies have to report their sustainability efforts. And it's way more than just greenwashing.
This isn't about looking good anymore. It's about companies having to connect the dots between what they're doing for the environment, society, the whole ESG thing, and how it actually impacts their financial health
Hmm.
long term.
Okay, so I've got to be honest. The IFRS S1 document you shared, dense. Where do we even begin?
Right? It's a lot to unpack.
Help us out.
Think of it this way. For the longest time, companies, they focus mainly on just the financial bottom line, profits.
Makes sense. That's the classic way of doing things.
Yeah.
Yeah.
But the world's changing, right? Investors, lenders, even employees, everyone's asking tougher questions these days.
They're more aware.
Exactly. So IFRS S1 is essentially saying, hey, companies, you need to show everyone how your sustainability efforts are actually concretely linked to your financial success.
So no more hiding behind like glossy sustainability reports that don't really say anything substantial.
Exactly. No more fluff. This is about transparency. This is about providing the complete picture of a company's performance.
It's like those optical illusions, you know? You see one image, but then look closer. Bam, there's a whole other picture hidden within it.
Ooh, I like that analogy.
Sometimes the hidden picture is the more important one.
Right. And IFRS S1 wants companies to show all the factors that could impact their financial future, especially when it comes to sustainability.
So when you say all the factors, what exactly do we mean here? What falls under like sustainability-related risks and opportunities? Because that seems pretty broad.
It is broad. We're not just talking about reducing a company's carbon footprint here.
It's more than that.
Much more. This standard covers things like how dependent a company is on natural resources,
Okay,
like water, especially if they're operating in, say, water-stressed areas.
right, water scarcity is a bigger and bigger issue globally. Companies can't afford to ignore that.
Exactly, they can't. And it goes even beyond that. IFRS S1 also looks at how things like employee satisfaction
Oh, interesting.
and having a skilled workforce actually impact a company's future.
Yeah, I can see the connection there. If a company's got happy, engaged employees, they're probably more productive, more innovative,
There you go.
and that can lead to new products, services that people actually want, like sustainable options, which are more and more in demand.
Exactly. It's not just about doing good for the planet. It's about smart business. Understanding how these big sustainability trends are influencing how consumers behave.
Makes sense.
And then there are things like geopolitical risks,
Yeah.
regulatory changes. All of these can really disrupt a business if they're not prepared.
Okay, so we're painting a pretty big picture here,
We are.
but how does IFRS S1 expect companies to actually show the link between all these sustainability factors and their bottom line?
That's where it gets really interesting. And that's what we'll really unpack next.
Okay, you've got my attention.
The key here is understanding how these sustainability issues can have real, tangible financial implications, both now and in the future.
All right, let's get into those financial impacts then. What kind of effects are we talking about? So we've established that ignoring sustainability is not exactly a recipe for success, kind of like ignoring, a giant iceberg when you're on the Titanic.
Yeah, not a good boy.
But how does IFRS S1 actually want companies to measure and report those financial impacts? Like, what's the method here?
So one of the core ideas here is materiality. Materiality. Okay, give me the layman's terms version.
Basically, it's all about what information is actually important enough to, influence an investor's decisions.
Makes sense. Right. So if a company knows something could really mess with their future cash flow, they can't just sweep it under the rug and pretend it's not happening.
Like, oh yeah, this new environmental regulation that's going to cost us a fortune. No big deal.
Exactly. Or, hey, consumers are suddenly all about that zero-waste lifestyle. We're totally on top of that.
Right. Hiding information like that would be like trying to sell a house with like a leaky roof and being like, nope, everything's perfect. Just move right in.
Exactly. And that's why IFRS S1 wants companies to think long-term, to think about all sorts of potential risks and opportunities, even the ones that might seem way off in the future.
So it's not enough to just report on what happened last year. They need to be thinking 5, 10 years down the line, like gazing into their crystal ball.
Yes. Well, Sort of. That's where scenario analysis comes in.
Scenario analysis.
Yeah, so IFRS S1 wants companies to really imagine different possible futures and how they would adapt to them.
Okay.
So, what if stricter environmental regulations are put in place? What if there's a huge shift toward a circular economy where, like, reusing and recycling become the norm? These are the kinds of questions they need to be asking themselves.
So they have to have a plan for like all these different potential realities.
Exactly.
Yeah.
Companies need to show that they've thought about these different scenarios and how they would handle them, both the risks and the opportunities.
So it's less about actually predicting the future and more about being prepared for like anything.
Exactly. It's about strategic foresight. Yeah, more than fortune telling.
Strategic foresight. I like that.
By thinking through these different possibilities, companies can make smarter decisions about how they invest their money, how they run their operations, their whole business strategy, really.
And I imagine be more upfront with investors about the challenges and also the potential rewards that are out there.
100%. Transparency is key.
Transparency seems to be the name of the game with IFRS S1. It's like they're saying, okay, no more smoke and mirrors, just show us what's really going on.
Right. And honestly, that's good for everyone. For investors, for the companies themselves, and frankly, for the planet. Because when businesses start taking these sustainability factors seriously, really incorporating them into their financial planning, it can lead to more sustainable practices across the board.
So it's kind of like if a company knows that their reliance on some resource is going to hurt their profits down the line, they're more likely to start looking for alternatives.
Yes, exactly. And that search for alternatives can drive innovation,
Mm-hmm.
it can lead to more resilient supply chains, and ultimately a more sustainable and profitable business. It's win-win.
This is all painting a really, really interesting picture here. It's like sustainability reporting is becoming less of a side note and more of a central theme in a company's like financial story. Would you agree with that?
Totally. And IFRS S1 is pushing this idea even further by basically saying that companies need to disclose all of this sustainability information
Hmm.
alongside their standard financial statements.
Yeah.
So it's not this separate thing anymore.
Whoa. Integrated reporting. So we're talking like weaving the two threads of sustainability and financials into a single tapestry so everyone can see how interconnected they really are.
That's a great way to put it. And speaking of connections, I think we're ready to connect that final piece of the puzzle. Like, how does this actually work in the real world?
Okay, so we've done the groundwork. We've talked about materiality, scenario analysis, time to bring the ship into the harbor. How does this integrated reporting actually work in the real world? Are we going to see like companies printing their sustainability reports on recycled paper and then like stapling them to their financial statements?
Probably not that literally, but you're hitting on the key point. It's about integration.
Okay.
IFRS S1 wants companies to present this like cohesive narrative, one where investors can clearly see how sustainability is woven into their financial decisions.
So it's not enough to just like have a separate sustainability report that kind of lives in its own little world.
Right. Imagine, you're looking at a company's balance sheet, and right there, alongside their assets and liabilities, they're reporting their water usage, especially in those water-stressed regions we talked about.
Right.
Or like what percentage of their revenue comes from sustainable products.
It's all right there together. That's a game changer. No more flipping between different reports, trying to put the puzzle pieces together yourself.
Exactly.
But let's be real, this is a huge change for companies. How prepared are they really to actually implement all of this?
Yeah, it's definitely a learning curve. IFRS S1 gives them the framework, but then they need to figure out, okay, how do we collect the right data? How do we do these complex scenario analyses? And then how do we actually report all of this clearly without making it overly complicated? It's a lot.
Like learning a whole new language, probably.
Kinda, yeah. It takes time, it takes practice.
And I bet some companies are going to be better at it than others.
For sure. Some are going to be way ahead of the curve.
Yeah.
And I think that's where we might start to see some really interesting competitive dynamics play out.
Ooh, how so?
Well, think about it. You're an investor. You're comparing two companies. One is giving you this really in-depth, integrated report that shows they're on top of all this. The other one, they're lagging behind. Who are you going to trust more with your money?
Yeah, the answer's pretty clear. Transparency builds trust. And in a world where investors and everyday people really care about sustainability, that trust, it's not just feel-good stuff. It can translate into real financial success.
100%. This isn't just about, checking boxes and complying with a new standard. This is about adapting to a changing world.
Mm.
And the companies that get it, the ones who show that commitment to sustainability and back it up with clear financial data, those are the ones that are going to thrive.
It's like you said earlier, connecting those dots between doing good and doing well.
Exactly.
So there you have it. We went from wondering if this whole sustainability reporting thing was just a trend to uncovering this major shift in how businesses operate and how they talk about their performance.
It's a big deal.
IFRS S1, it's more than just some boring accounting standard. It's really a roadmap, I think, to a more sustainable, more transparent future for business.
A roadmap that everyone should be paying attention to. Investors, employees, anyone who cares about the planet, really.
So true. And on that note, we'll leave you with this. As you follow the companies you invest in, the brands you support, even the places you work, ask yourself, how are they navigating this new era of sustainability and transparency? What story are their financial statements telling? Because the answers just might surprise you. Until next time, keep diving deeper.